Directors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Hello everybody, it is actually the afternoon. We had a glitch in our hosting company not recording our video from the early morning. So we're going to go through most of the things that we went through this morning and recap everything, and the markets are much worse here. So this will be an update to what we did actually live this morning. So if you missed that, or if you're tuning in off of some other access point that you have, then welcome, and we're going to go ahead and go through the show as we talked about. So as everyone knows, it's about Greece and everything's going on. And one of the key elements to understand that, as I had in commentary last night, it really is not just about Greece, it's what Greece represents. And Greece represents what is wrong with everybody else. They have debt that they can't pay for, it's just that we're actually recognizing and dealing with it at the moment. From the early morning, that when we did our broadcast earlier in the day, we literally are pretty assured that they're going to default with the IMF tomorrow, and that will kick in several default clauses. All types of things are going to go across the board and cause a lot of havoc. Well, that's really bad for Europe. It's bad for the European Union. As I said, I really think this is really about a bigger picture. I referenced in commentary that, is this a Bear Stearns moment? And Bear Stearns was the smallest investment bank to go down first, but everybody quickly realized that what the problems they had with subprime and all the other things that they were dealing with was exactly what everyone else was going to be dealing with as well. And in the case of, is this the United States story? No. But are we seeing what it looks like when the wheels come off? Absolutely. ATMs down 60 euros max a day coming out of your ATM. That means if you go online and try to use your ATM card, it's probably the same $60. It doesn't get you far.
No, it doesn't.
They're worried about how you're going to pay your rent, all the stuff that's going on out there. So the realities of the moment are there. And one of the other stories that hasn't been talked about a lot, it may be later in the day, it's filtered around the news rooms a little bit better than what it was early this morning, but is Puerto Rico. And Puerto Rico is about to, they have $73 billion of municipal debt that's about to blow up. And as the governor said of Puerto Rico, his words, not mine, is that we're on a death spiral. And the death spiral is firmly in place, and they're going to default. That's right here, not in our backyard, maybe in our front yard. And it's pretty, there's a lot going on. They don't have the same protections that you have, like Detroit had, and other cities that have went bankrupt. I believe there's a Section 9 bankruptcy or something, that Chapter 9, that they don't have access to. So the debtors have I don't know what they do. Are they going to? I don't know what's going to happen. They're not going to get paid, is what's going to happen. And
right.
The bill collectors can call them all day. They're just not going to get paid. And so same thing's happening in Greece simultaneously. It's interesting that this came out today, whether it was planned, like, okay, this is a good time to tell the children we can't pay our bills. I don't know. But the bottom line is these two events are pretty substantial, and they are really representative of what's going on across the board. We all knew long ago that there was no way that we could pay all this debt off. $18 trillion worth of debt currently in the books. I had the debt clock up at the end of the show this morning. Probably bring that up as we go through this. This will probably be somewhat abbreviated, but probably still be 35, 40 minutes for us to get through all the details of things that are going on. And all of the material things that are happening up front with Greece and with Puerto Rico are pretty substantive from the standpoint of they are triggering some of the other events, or at least from a psychology and a market sentiment level. Everybody's got to be going, wow, this really doesn't work. This is a sign that you can't keep borrowing money and borrowing money and borrowing money and kicking cans down the road. Ultimately, you do get to the end of the road, and Greece is sitting at the end of the road, and the next kick is off the cliff, and there's nowhere to go. I seem to think that maybe they got a deal, and it might be with some guys up there in Moscow. Who knows what they want? Putin would love to have a nice warm water, real warm water port and a nice airstrip somewhere around there, I'm sure. Who knows what's going on and how desperate these folks are, and the disruption this could be on a geopolitical level. The market certainly, when we were talking this morning, we're down about 23 handles on the S&P. We're now down 37 handles. We're down 302 points in the Dow Jones. This is not, as I always say, and Mitch in the earlier show mentioned that, I always say, what does this have to do with corporate profits in America? And the answer is nothing. But what it does have to do is market sentiment about the reality of that this whole debt thing is not happening. The other story that's out there last night, actually going back to last Friday, China absolutely collapsed last Friday, down 7.7%. And nobody was talking about it. Friday's action, we closed almost flat on the day, closed down 86 cents on Friday. Nobody cared that this was even happening. And I remember calling Mitch and going, look at this, nobody cares. This is amazing. And no one did care. So last night they were down almost over 7% intraday, closed down 3.3. And the significant thing about this is that the Bank of China, or the Central Bank of China, actually lowered reserve requirements to banks and lowered interest rates. And the market rallied briefly intraday. I think they said it was up. I didn't actually see it. I don't have a live feed. But it was up about 5.5%. It went from 5.5% up to -7%. So a 12% move intraday, and finished down 3.3%. And the point of that is that no one cared that the central bank was trying to support the market. That's the thing that's always worked. We do this, the market goes back up, everything's okay. We go back and I don't know, maybe they drink tea instead of coffee, I'm not sure. So the bottom line is no one cared that the equal to the Federal Reserve that this happened. And then we see Greece, and no one this whole event in Greece is actually being accelerated. The ECB supposedly has all of these different types of tools that they can use to save and keep contagion. And the talk is that this won't be like 2011, that they've got all these tools now. They have the ELA, which is the Emergency Lending Authority, and all these little things they can do. That's what's been keeping the Greek banks open until today. And then once they did the referendum, they just shut the spigot off. And so now they're doing with whatever liquidity's in there and doing capital controls with the $60 deal and all that. And so in the end, this has shaken everybody up, not because Greece might leave. The Grexit doesn't matter. It's not about that. It's the reality that these things can happen on a scale when you build debt that you can't repay. And at some stage, if you look at the U.S. debt clock, you will see that debt's never going to be paid. And the liabilities that are on the books are $96 trillion. That's just a ridiculous amount of money. So everybody's been living on borrowed time, and I guess we're all recognizing that this is happening right now. So we did have a couple reports that came out earlier today. I want Mitch to just talk about, and then we'll move on to the charts and get right into the thick of things here.
Yeah, today we had the pending home sales index released. Not only did we see a positive month, it was a slight month-over-month change where we saw an increase of 0.9%. The expectations of that were a 0.6% So we did slightly beat expectations. The problem is we're seeing the lowest amount of growth we've seen since 2014. We also saw that they revised the prior month numbers down to 111.6, and so that reduced the performance of last month. So even though we did get a slight beat on this month, it did sort of temper it a little bit with the adjustment to last week. We also had the Dallas Fed manufacturing survey get released. They were expecting consensus of minus 13.5, came in at a -7, so that was a nice beat there. We're continuing to watch to see what these overall economic reports tend to do with market sentiment. As we talked about before, even though a lot of these items are currently unrelated to the overall domestic market, they do happen to shift sentiment and add flavor to it. We've seen a fair amount of growth, especially in the housing market, over the last few months and really the last year or two, as we've seen some additional strength and seen some real momentum there. We're beginning to see a lot of volatility now in the various different reports of the housing index, as we're seeing at times a slight beat, a slight miss, and things are beginning to taper off a little bit on that. And for the longest time, that had been the big driver of the overall market, at least before the last bubble popped. This time, we're just trying to get back to where we were at prior levels, and yet things are already starting to wane at where we're at right now, even though a lot of those home price indexes have yet to recover where we're at back in the 2007, 2008 highs of that. This week we have a number of different reports that we're going to be keeping an eye on. Tomorrow we have another update to the house price index, so we'll be keeping our eyes on that, as well as we also have the employment situation coming out at the end of this week. Even though it is a shortened week, this week it'll be on Thursday as opposed to Friday.
Yeah, there's plenty that's going to be going on for sure this week. So thanks, Mitch. I've got us both on screen so we can just kind of discuss a little bit. I want to go through and go ahead and hit into the technicals while the market's still open. There's several things I want to be able to cover in the last 30 minutes. We're seeing an acceleration to the downside right now with these numbers, and it's somewhat interesting from the standpoint of what's going on overall in the markets. But we're trading at 2161.46 right now. That is right at a new low for the session as we come in. And it's typical that when you see the last half hour of the market selling, this is typical of European selling coming in. Here's the thing, you start to see further decay of these markets, they're going to sell anything. If you remember back in 2008, the only market that was working really was, since the credit markets were so destroyed at that time, the only place you could raise capital was selling of stocks, and that's what kept the stock market going down. We are not that indifferent right now. There's some flight to quality going on today with the treasuries are picking up some capital from the standpoint of that. Actually, since this morning, it's a little bit more. I think we're here right now. We're down 1.45 on the day. We're down to 231, and that is at 233. 233. So this is, you're seeing some acceleration in this pattern, but in the end, there's a lot going on here. And I'm going to do something a little different what I did this morning. Since I already have this chart on the screen here, I'm going to go ahead and cover it. And I'm going to go off screen here for a minute so you can see it full screen. But this is right here. I'm going to change just a couple things real quick, and then I'm going to get rid of some of these indicators just so that you'll see a better scaling of the actual chart and price chart that we're seeing. There's one last thing I want to take off here, and then we'll be all set. One last thing. Yeah, so what this chart represents is actually some pretty interesting things. I'm glad I left this up. This chart represents going all the way back to around 1961 on this graph. So this is a monthly graph, and I talked about this way back in 2005 and 7, going way back in some of my long-term projections, and especially after 2008 when we hit the lows in 2003, when we rallied up into the '07 highs, there was a couple interesting things happened, and I think this is the important thing to understand is this long-term channel. And if you're a usual watcher of the show, you know that I have been actually talking about this event occurring for about the last 5 months. We've been setting up a major top in the markets, and so what we have is this move here where we had this big move up, and this move right here, I put an arrow down, was a wave 3, and then we had what's called a corrective wave, ABC, and then this is wave 5. So going back, we have what we call a 5-wave move. And if I brought up the Dow Jones, I can go back 100 years. This becomes a little more pronounced, but you can see clearly that we are completing the what's called a grand supercycle, the biggest wave structure there is. And the typical move after this leg is completed, and I didn't have this up this morning, so this is interesting, is that I'm going to put an arrow here. There is 2 cycles that are coming in, and this cycle that's showing up right now is what's called a Fibonacci cluster cycle, and there is major cycles that are coming in right at this point in time right now. So this even lends even more credibility to what I'm about to say. So based on a basic Elliott wave theory, what you see here is when you get this 5th wave up, you get this extreme, then the next big movement will be in the opposite direction, and it usually goes to wave 4 previous degree. So this wave that we have here has sort of a 1, 2, 3. There's a 4 wave because it's so expanded like this. There's 5 waves up here completing this sequence. The next waves down would do something like this, and they ultimately go all the way back to wave 4 previous degree, which is the last horizontal line I put on there, which is 660. I guess 666 was the actual number, but the
666, yeah.
And so that's only the initial move. And as I've discussed, and we're going to go through the treasuries here in just a minute, but all of these charts are lining up. The U.S. dollar, the treasuries, the stock market is all lining up. Probably one of the better lining up of the stars that I've seen in a lot of years. In 2008, there were some things that lined up, but that was more about a collapse of the financial system and the bank system around mortgages. This is much bigger, and this is something that has been discussed by all of us, no matter whether they're sitting around a campfire or sitting around a business table, talking about this massive buildup of debt that has occurred. And in the end, there's absolutely no way to get around what the reality of the situation is. You cannot fix a debt issue with more debt. You can't borrow more and more and more. That's what Greece has done. You can see where they are today. All of the Western governments have done this. The only folks that haven't really built up the debt are the people that are getting all the money because they make all the goods right now, which is China. And this pattern is most likely going to end. This is a 100-year cycle that we're really looking at. If I brought up the Dow Jones, I probably should have brought that chart up, but this one was already there just waiting for me. So I went ahead and built this out. But the bottom line is this is a huge, huge pattern that's unfolding. It's like the 100-year flood. This is something that only happens, in a 100-year cycle. So we're going all the way back, literally to the early 1900s and to complete the cycle. And oddly enough, the crash of 1929 is a 1-2 pattern. When you go out there and look at that, it's pretty revealing. So we had that big long move. It took 22 some odd years before we made a new high off the 1929 highs, and then we went up. The 87 is also a blip on here as well. That's way buried down about where these arrows are right here. That's the 87 crash right there, which is part of a upward sequence that you see now as all these markets have been inflated. And in my commentary, I said the central banks are losing control, and they have not only losing control, they have lost control. And we're looking at really, because just looking at what happened in China last night, and I've said this over and over and over for months now, that the Federal Reserve really doesn't have anything, and this thing only works as long as we all believe it. I believe, a lot of believes there. This is the beginning of the, I guess, finally realizing that this strategy isn't a long-term strategy, and we're going to have to work this stuff out of the system. So it does appear that we're very close to the end, if you will, from the standpoint of this major trend that's up. So let's go, and I'm going to add back some of these patterns just for a second. So bear with me 1 second.
And it's amazing to note that already today we're approaching the lows of the week, or the extreme levels of the week. Today our weekly level was 2057.65 as the extreme support. Right now we're trading at 2059.82, at least on the cash market. So I mean, clearly this is going down in a hurry out of this trading range that we've been stuck in for some time, as we've hit this tipping point on the market.
Yeah, so I've got the, this is getting kind of crazy. We're now, as we're getting closer to the close, we're 15 minutes from the close right now, and we're seeing this thing absolutely accelerate into the close to the downside. Of all of the last 5 months, so I didn't get to say this morning because what's happening right now hadn't happened, and all the last 5 months we have not been able to go under 2072 has been the number. We're now at 2059, as Mitch just was discussing, and let me go to the weekly graph here, and we're looking now at the low of 2058.75. Those are new lows as we speak. This thing is punching out new lows. So there's a massive sell-off coming into this close. This, folks, I'm telling you right now, is not about Greece. This is about the realization of what's really gone on after all these years. We've been wondering. I think the tipping point is here, and that we're going to see, you're probably going to hear something from Janet Yellen and gang. Something's going to come out. Somebody's getting scared right now, trying to figure out what to do, and whether they have this secret account that I've talked about before in Brussels. They're not using it today. It's almost like they want this thing to get to an extreme here. And this is very quick. We're down 2% now on the day, and we're continuing to see, like I said, some pretty heavy selling coming in here on the close. The results of this will be, as I discussed in the pattern, the first move down here. If we look at the monthly pattern here, I'm going to expand this out just a bit so we can see it a little better. But the first move down, once we cross through, we are setting right at what I talked about earlier this morning, the 2055 level. This is major support. This is where it's all at. We're at 0.27 on the monthly PPM 1 right now, which is the lowest it's been for a lot of years, actually, going, it looks like all the way back to 09. It's been a while since we've seen this value at this level. And it's starting to accelerate down, as is. We're well below 1% on the PPM2 as well. I'll bring that up on screen just for a second so you can see that. But we're PPM1 right now is 2027, 2092, 0.92 on the PPM2, and PPM3 is right now at 1%, 1.01%. So all of these moving averages are starting to roll over. As I've talked about before, we're due for a crossover here sometime this summer, possibly in July, but most likely in August or September is where the big crossover happens, and that will be the beginning of the major section of decline. So first move, 2053 is the number. We're sitting right at 2057 right now. It's got a bounce here. We probably will get a bounce, but if we don't, that'll just tell you more about the character of this market if it goes straight through here. The next stop beyond this is 1960, and then my expectation would be we would get down probably just below 2000, 1980 or so. I'll do some Fibonacci stuff on the commentary so you can see that, but we'll get some kind of bounce out of there. That next bounce will be probably your last point to get out, and we'll start working our way toward the 1738 level. And this is a monthly graph, so keep in mind that each bar is 1 month. So we're talking about maybe at least 6 to 12 month window, and we're just completing what I call a pretty strong business cycle that usually runs about 18 to 24 months. This thing has been extended all the way back. Really, if you go look at it, it's been all the way back to 2012 was where that started from. So looking at everything that's going on here, there's some pretty serious things going on. We're not bouncing at all here with 12 minutes to go. So what I want to do here is I want to go over and we're going to look at I've got the Dower up, and this is something I talked about earlier, but the Dower is in a major bull market, but now even with all this pressure, they're selling everything Dowers right now. So the Dower's getting hit. We were positive this morning. This is actually turned around, and we're seeing down 0.60%. We're down 58 cents on the index at 94.88. There's very solid support between 93 and 92. Don't see it getting below there, as this thing is in a major cyclical uptrend. And I think after the initial fall in rates today, that we'll see all this stuff firm up in the next couple of days. And as Mitch was talking about earlier, we got a ton of news coming out. We got unemployment coming. We got ADP on Wednesday. We got a lot of stuff to digest in a very short week, because this is a holiday shortened week. We end up on Thursday. So all this stuff has got to be done in the next 3 sessions now that we're at the end of today. Going over and looking at the treasuries, I talked about this in commentary, but we were right at the 247 mark, which was major resistance. And this has been the case that I've been talking about for a while. And right now we're at 233, down 145. The treasuries are closed up right now. But this is the long-term monthly graph that I had up earlier. This chart, bringing up the whiteboard for a second here, is setting up what I believe to be a pretty major move. And this goes in sync with everything that I've been talking about. So this is a classic right shoulder. We're working on getting through these moving averages right now, which still represent some pretty stiff resistance right at 240. So we're going to spend probably the month of July maybe trying to get above 240, staying between 224 and 240. Ultimately, this thing is on its way to 380 to probably 405 on that. And if you start taking our national debt and throwing an extra percentage point on all this money that's rolling over every week, it gets real expensive real quick. And it doesn't take long for the markets to start to realize that we can't sustain our debt. So I believe this is a pretty big tipping point with what's going on in Greece, and I don't think all this selling is about Greece. Maybe it's going to signal the end of the, at least from the euro as far as that goes. Maybe it's one of those chinks in the armor that turned into a crack, and now we got big issues. But this is the main thing that's going on. And Mitch, we might want to just spend a minute and maybe a quick overview of what's not going on in the database. And and so I'm going to bring Mitch up here.
Looks like we are starting to see a little bit of a bottom now, and we did dip below that extreme support number for the week. And we did also dip below all the gains that we had for this year. So we were negative on the year very briefly already today.
Yeah, and the Dow Jones is already negative, right?
Correct, yep.
Oh, I'm trying to figure out why this thing won't draw now. I know. I'm trying to get my cursor. So let's go ahead and just want to get to this thing. I think we're still logged in with everything. So we'll go real quick here, folks, and I'm going to get off screen here with Mitch. 1 second, Mitch. I'll give it back.
All right.
All right. It's all yours.
All right. I am pulling up my cheat sheet as well to be able to take a look at what took place over the weekend on the run for the weekly trade systems. So as always, what we do is we go over to the 2.0 system. We click on research, go to all stats. And what I just want to highlight real quick is the activity that we saw within the weekly 1.2 as well as the 3.2 database. You'll see that we have, currently we're only 42% invested. So you see we're still hovering right around that 42.47% level. The activity that we saw this week, if we click on the all stats page, you'll see that we sold off 232 positions on the 1.2 system, and we took on 434 on the 1.2 system as well. So we had 434 exits on the week. So we had a negative sentiment change on the shorter term of the intermediate trade systems. Jumping over to the weekly 3.2.
Say that again. What? I'm sorry.
Of the two intermediate trade systems, we have the 1.2 and the 3.2. Okay. 3.2 has that extra long-term moving average in place that does help to smooth out some of the activity. And what we saw this week is that the shorter temperament of the two, the 1.2 trade system, did have a negative sentiment to it. As you can see, the 232 additions to the 434 exits, while as we had on the 3.2 system, 312 entries to the 232 exits. When all was said and done, if you look at the net activity on the optimized trade systems for the stocks, we took on 8 new positions. So out of the 6,158 different stocks we have loaded up in this database, we only increased that holding that we had prior to this by a total of 8 stocks. On the mutual fund side of things, of those 10 or 11,000 mutual funds that make up the database, we trimmed off a net of 28 mutual funds. So it was a very light activity for this week when it came to the weekly run on the trade systems. What we'll do is we'll go ahead and click back over to the dashboard. Looks like I lost the mouse again, Bob. If you could go ahead and bring that over.
It should be yours.
All right, perfect. So what we'll do is we'll go ahead and take a look at the dashboard and see where this breakdown is taking place. And the real story continues to be in the mutual fund space as we look at these composites of assets. And as you can see right here, the municipal bond fund, we only currently have 1 percentage point of all the muni bond funds long on a weekly basis. So if you happen to have this in your portfolio, you're just not going to see us owning any of those muni bond funds at this time. They had been a really nice trade for the last year or so, but we've been trimming this position pretty steadily since the end of March, and now we're at this point where we're just flat all these positions. And it's sort of interesting to note, you know, the concerns that we now have, or we're seeing out of the governor of Puerto Rico, as it looks like they have 72 billion or 73 billion that's on the line that they don't know how they're going to repay, and they're in this death spiral, in his own words. Is trying to figure out how they're going to make good on this. And a lot of this debt is currently owned by these muni bond funds. Going further down the list, you see on the taxable bond funds, we did see some more selling in this place. And we're finally starting to see the taxable bond funds catch up to where we've already seen a lot of exits on the muni bond funds. So this is looking very similar to past broadcasts on the Market Thunder broadcast, where we looked a month or two ago, where we were seeing very specific selling in the various different categories of the bond space. And now you're seeing already the intermediate term government and intermediate term bond funds. They're already almost completely out at this point. You can see just 1%, 2% here that we're currently long. What we're still holding on to at this point are those high yield funds that have been doing very well up until this point, as well as some of the emerging market debt and then the bank quality loan mutual funds.
Hey, Mitch, I'm going to interrupt you because we're right for 3 minutes to the close. I want to watch this close together so we can kind of bring that back up for a minute. And
sounds good.
Just because I'm going to bring up what we're watching here is let me get Mitch out of the way there, and maybe me too. So what we're watching here, folks, is the futures trade. And you can see a tick-by-tick chart. We're seeing a 1-minute graph, and on the far left-hand side is actually the time in sales and the bid offers for each one of these things. So we are right now 8 prints off the low of the session. As we bounced a little bit, we're back down at 2058.73. I don't have the low for the S&P in front of me. Do you have that, Mitch? But anyway, what we're seeing here is you can watch this thing into the close here and see this action. And once the bell rings, the futures will continue to trade for 15 minutes. And we'll just watch this into close. We've only got about 2 minutes to go, and I can talk about some of the elements that are happening. But it would be interesting to see. We're now 4 ticks off the lows, and they're just taking, you can see a lot of red in the middle screen that's showing the selling of hitting that bid. And so we're now 3 ticks on the bid off of the lows of the day. and now and so if we print down, there's not much there. We're actually one tick off the lows. We're probably going to make new lows coming into the close with a minute and a half to go. It's a pretty terrible close as they go. So we're seeing the markets. Here we are at the low of the session, and there's quite a bit of pressure here. A lot of selling coming in right now. And there we go, new lows. So we're printing new lows with about a minute and a half to go, and the last minute will happen. Typically what will happen, we'll watch this for a minute for educational purposes. What will happen is, here we got a bounce. We're 5 ticks off the low. You print a new low, you bounce back, and then if the sellers don't reemerge, then we'll see a slight recovery on the close. We're into the closing prices right now with less than a minute to go, and we're back down at the lows of the session again. So we bounce 4 or 5 ticks, and then we print it up. If they sell them off here in the last minute, here we are in the low tick, and looks like there's new lows as we close with less than 30 seconds to go. So we're seeing some pretty heavy selling right into the final ticks of the day. It might be one of those days where the cash closes right on the low of the session. So here we go. Now here's our bounce on the close. With about 15 seconds ago, we just rallied 250 points. So that was quick little short covering, and that'll keep the market from closing right on the lows of the session. And a lot of times, as the bell rings, the market's closed now. You see that it shows on the screen that little pop-up that shows the closes there. And a lot of times you'll see this. You get a real feel for the last 15 minutes of the markets when you see these types of activities on the at the close. You'll see what the futures traders, and if there's any short covering or if there's just further selling, and that will determine tomorrow morning how we're going to open and whether there's a 200 point or a 50 point or it opens flat. So right now, from where we closed, it looks like we're probably about 200 points higher already. So the futures are starting to see some buying back, because probably all the futures traders have been heavily short all day, so they're looking to take profits. So you see a little bit of bounce that has nothing to really do with anything other than the trading activity. So sorry to interrupt you there, Mitch. You don't get an opportunity much to go through a close. The close is one of the most significant parts of the day from the standpoint of how this market action comes in. We bounced from, now we're all the way to 51.50. We were at 20.47.25, right on the low ticks within 30 seconds ago. Now we're, like I said, we're just about 400 points higher there, and off on the side you can see this chart printing up right off of that low. And so anyway, we won't watch the next 15 minutes of trading. We're this 1 minute. You can see that little short covering, that little bounce that happens. And now what that'll set up is probably somewhere between about 325 and 400. So if you see the futures unchanged coming in the morning, we're going to open about 400 higher. So typically after a day like we've seen today, we're going to see some sort of bounce off of this level. Anyway, just to kind of complete out where we were talking about this morning is really trying to come up with some of the scenarios that are unfolding. I talked about 2055 is a huge support number. We went down to 2056.64. We basically have printed this thing. The next couple days, this will be in commentary tonight, the next couple days are going to be critical how we act around this number. I would guess that we would run back toward 2078, 2082 off the cuff here, not doing any real analysis other than off the cuff, just looking at things at real time here. But there's probably going to be a little bounce. That'll be 20 handles or something. You're going to see lots of volatility overnight. You're likely to see news stories. And I think ultimately, I talked about China earlier, that's probably going to be a place to keep an eye out. And I'm going to bring up the China index and just run down this show just real quick. That's MCHI.
Yep.
And so this is on a monthly, but let me bring it up into a daily graph here, and it gives you a better feel for what this thing looks like. You can see the last 4 days have just been straight down. One of the things, if you're a technician or a wannabe technician, there's some really this is really cool stuff because you don't see this on most really liquid charts. You don't see it on the S&P index because of the way it's calculated. Typically, the way the values come in, today's close kind of the first ticks of tomorrow, unless there's a drastic pricing gap down. You don't get a gap down, but we've had on this industry, we've got 1, 2, 3 gaps in a row. There's a breakaway and 2 runaway gaps. There's usually one more gap that would be an exhaustion gap. So if this thing consolidates here, maybe fills this gap above, then we would see maybe some further downside. But this market here is going to be what everyone's finally going to pay attention to. If it continues to fall down, then that's going to be a problem. On the close here, this is down 2.84%. Last night, China was down over 7 intraday. So they're probably most likely going to test those lows of yesterday, their time, tonight. And if those hold, then maybe we'll see some consolidation. We might see a little bounce in China. If they don't hold, then we're going to continue to see this breakaway pattern that's right now straight down continue. As I mentioned earlier, they did all kinds of stimulus. They lowered the reserve requirement. They dropped interest rates last night. Nothing worked. Okay, we're looking at this thing. They're in a mini panic mode, and no matter what the central bank or the Bank of China is doing, no one really cares at the moment. People are just bailing out of this thing. So anyway, there's that, and then I think we looked at the GREK, which is the Greek index, and you can see Mitch was talking about this thing was up 19.58 last week, and it's down 19.78 today. So all of last week went away in one day. And the realization of what's going on. And I know I covered everything, so just in closing, to close out this meeting, there's some substantial movements going on in the charts that are most likely going to lead us to a major high, not an intermediate high. This is probably a multi-year high. In the past, I've actually talked about this being a generational high. It's very possibly, depending on what comes out of this is one of those moments in time that you look back on and you go, wow, we should have seen that one. And we're watching it. We've done 2 broadcasts today, one that didn't get recorded as supposed to. It may actually show up. They tell us that they may be able to recover it tomorrow, but that word may always bothers me. So anyway, as far as these markets go, I really think we're setting up a major top. Greece is not about this action you are watching today was not about Greece leaving the Eurozone. It's not about Greece debt. It's about the realization, I hate to keep saying this, I know I sunk my putt about an hour ago, but it's not about Greece. It's about the realization that Greece can't pay its bills. It's a realization that none of the rest of us can pay our bills ultimately or not, ever. $18 trillion worth of debt can't be paid. And I don't think, I don't know if we kept some of the same stuff up from earlier. Oh, yes, we did. So I'll close here where I did this morning. I've got the debt clock up here. We're 18,285,000,000. The big number is U.S. unfunded liabilities. This is the unfunded key word, $96.9 trillion. That's big trouble, folks. That's all I can say. And everybody's starting to look at this stuff and kind of wonder where the party ends. Where's the music stop playing? And do you have a chair to sit in? And so anyway, appreciate everybody taking the time to watch. I see that I was looking at the board. We actually have some live viewers that came on with us. So thanks again for some of you. Maybe watched twice a day or you didn't get to watch earlier. So we wanted to do this. It's unfortunate. The broadcast this morning I felt was really strong. So hopefully that'll show up. We'll email you and let you know if it gets up there. But for sure this one will be up there. We're already tested it. I will be a screaming maniac at our vendor if this thing didn't get recorded. Anyway, thanks again for watching. And I will cover whatever I can find overnight to bring in more light into this situation. Thanks again for watching. We will see you next Monday.